Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. After that, we will be taking a brief tour through our core list of companies, and if you stick with me towards the end of the video, I've got 4 additional trade ideas to share with you, so definitely stay tuned for that. Let's kick off today's S&P analysis with the sectors as we always do. Who was leading, who was losing, and where was the weight? The XLY for consumer discretionaries led the pack today, up 0.82%, but that's as measured from the prior day's close. From this morning's open, it was up an even more impressive 2.86%. At the bottom of the barrel, we see the XLI for the industrial sector down 1.22%, but again, that's as measured from the prior day's close here in column number 1. From column number 2, the measure from today's open, the true laggard would have been one step ahead here, the XLV for the healthcare sector. Of course, the discrepancy between column 1 and column 2 is the fact that CPI caused a massive gap down, hence all the red reads in column 1, but a majority of the sectors actually rallied to close the gap and some, hence the positive reads, the green reads, in column number 2. And as day traders, we are much more concerned with column number 2 in the first place. So where were the heavier weighted sectors? Of course, the XLK, the tech sector, the heaviest of them all, up towards the top of the list, down 0.26% as measured from the prior day's close. From today's open, up an impressive 1.65%. The XLF is the second heaviest weighted sector that we're watching in our lineup, down 0.89% from the prior day's close. From today's open, really not as impressive, only up 0.19%. And down at the bottom of the barrel, as we already discussed, the XLV from the prior day's close down 0.97, and as we mentioned earlier, from today's open also down, but only 0.13%. So let's check in on these structural charts and just sort of evaluate how the trends are continuing to unfold here. In the XLY, consumer discretionary, you can see the relative strength was quite apparent, right? We clearly have a higher low off of the support trend line, but more importantly, if we look at the close of today's bar, it was in a couple of pretty nuanced places. So not only do we close the gap and close inside the prior day's range, but we also close slightly above the prior day's opening print. That, to me, is a fairly bullish implication, right? If it was going to be bearish, obviously the sellers had really 3 options to keep the sort of ball in their courts, if you will. Number 1 would have been just selling off of the gap down in the first place. That obviously didn't happen. Number 2 would have been a partial gap fill. That didn't happen. Number 3, full gap fill, and then a reversal off of it. That also did not happen. So the buyers, to me, strike me as being strong here, or the sellers are just nowhere to be found willing to short at these lows. So the pattern in play now is essentially changing from this double bottom, right? The neckline is no longer in play as a neckline, but instead the pullback that has produced now another higher low, if we can interact with this area once again, the old neckline of the double bottom, which is around 148.25, that's just now going to act as the breakout point of an ascending triangle, right? So the pattern has shifted slightly to something that would now look like this. Ascending triangle, the break is still up and over that same quote-unquote neckline area, 148.25, and if that were to happen, we're gunning for the equal highs up here, closer to 157.18. Because we're still in the pattern, I would say you would at least have to be neutral here. If it was going to be more bearish, again, we should have expected a weaker close and perhaps a breakdown of the support trend line. It simply wasn't the case. In the midpoint of the pattern, I would be at least neutral, if not slightly bullish, again, based on the relative strength of today's close inside the prior day's range and above the prior day's open. So that's your XLY. It's technically a pretty heavyweight sector, so that's why we spent some time on it. The XLP, consumer staples, up next. What do we see on this chart in front of us here? Really just an inverted hammer that's pulled back to the midpoint of the consolidation range. Any red flags? Absolutely not. The only flag that we're continuing to see is the bull flag here on your screen that we've just outlined. The look here to remain sort of optimistic and bullish about a reversal in the marketplace would be continued lag. If the XLY, XLK, and XLF want to perk up, this one can follow suit after the fact for a breakout of the bull flag. Don't get me wrong, upward pressure is still good upward pressure for the S&P 500, but overall, we want to see the risk on heavier weight sectors doing the work, not a rally led by a defensive sector, aka the XLP, right? So no major concerns as long as we hang out sideways in this flag. The fact that we have seen multiple upper wicks and inverted hammers here that have broken down off the top end have me pretty convinced that we will stay neutral in this area and maybe even head a little bit lower, right? That would not be the end of the world, remembering again that this is a defensive sector. Next up, we've got the XLE for the energy sector. The damage has been done here, right? We've pulled back off the highs. It's no longer rallying and leading the charge to the upside. We want to find it, or we want to see it find rather, a little bit of a bottom, right? right? So can we hang out here around the 200 SMA? That's the green line here, and not really break down any further than the 68 handle? That would be the preferred look, just a sideways market here in energy. I will say that the inverted hammer on today's session would lend itself to sellers being able to step in underneath the lows here for a breakdown, at least to that 66 mark, this prior low. So there are some bearish implications based on the way that this candle closed here, but overall, just going sideways and not continuing this aggressive descent does not strike me as major concern in the XLE. Just like we were talking about any upward pressure is upward pressure in the XLP, remember in the XLE, it's the exact opposite, right? Any downward pressure is still downward pressure for our S&P 500. So that's what we've got in the energy sector. Moving along, XLK, the tech sector, the heaviest weighted sector, perhaps the most important sector of them all. Very similar look to the XLY, but some slight nuances here that I do want to point out. So number one is first, yes, we do have the higher lows, but look at where we've closed. So yes, it is inside the prior day's range, but it is not above the high of the prior day's session. So, or excuse me, not the high, but the opening print of the prior day's session. So is it bullish to neutral? Yeah, absolutely. Impressive move from the buyers off the trend line, off the gap down to close the gap and close inside the prior day's range. Absolutely, but it's not as bullish as what we just saw in the XLY. So I'd be a little bit more on the neutral front here instead of slightly more bullish as compared to the XLY that we were just discussing. We did also close above the 128.40 pivot, which is coming from back in here. Remember, support, support, broken down, resistant, 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 so on and so forth, right? Support, support. We are back above that. It would be ideal for this into the end of the week to remain above and then potentially head up towards the breakout point into next week here. That, of course, is the same looking ascending triangle that we drew in the XLY. So overall, you know, kind of more neutral here, just based on the fact that the close was not as firm inside the prior day's range. It's still in there, but not as firm, obviously, as the XLY that we were just discussing. So a little bit more neutral in the XLK, which again, heaviest weighted sector, probably going to put more importance into that, right? Next up, the XLU, utilities. What's going on in this sector? Just sideways here. No major sort of moves based on the CPI, just kind of flat inside of this overall range. Perfect look, right? This is kind of what we want to see happen in energy. Obviously, energy would be happening down here, but this sideways look is the desirable outcome for these risk-off defensive sectors. The more that they can just cool off and not lead the charge or continue a breakdown, that's a better environment for the S&P 500 to find a little bit more of a footing. Of course, the risk here is that this could break down underneath the flag with multiple inverted hammers stacking now, but being such a lightweight sector, I'm not really overly concerned with breakdowns in utilities until it breaches this set of lows here, much closer to 64.50. Okay, so there's a ways to go before this would really start to become much more of a concern for the S&P 500, still a lightweight sector. So moving along, XLC, comms sector, communications, what's going on in this one? You can clearly see a much more similar look to that of the XLK, so supporting off the trend line. Again, not as impressive of a close. So if we just think about this in terms of order, XLY, most impressive close. XLK, more neutral. This one, definitely not nearly as neutral as the XLK, slightly more bearish with the close underneath the prior day's range, right? So we dipped a toe inside of the range, but we were not able to close inside of it. That is the slight weakness here that we're seeing in the XLC. So a little bit more bearish. Obviously, the pattern is still the same with an ascending triangle holding up for that higher low at the trend line. The concern here would be if we roll over and get back into it, this is a weak level. We've discussed that in the past around 53.68. If that were to be breached, I would imagine it sets up the move for equal lows down here, and that just goes to show we would be preserving the daily downtrend. And just to quickly revisit the XLK, because I feel like this is probably worth doing here as well. Remember, if this can't accept over that 128.40, which we were discussing just a moment ago, and gets back into the trend line, that sets up a breakdown for this weak level right here, 125.10. We've discussed this in the past too, right? If that breaks, equal low is probably on the table. Okay, so that's the risk to the downside. I should probably at least address that because this didn't quite have as strong of a close as what we just saw in the XLY, right? So that's your downside risk. If into the end of the week we breach the trend line, watch out for this set of three equal lows. 125.10 would be a critical number that I would want you to have on your chart, okay? So back over to the XLC. Just to round this one out quickly, and then we'll get on with the analysis here. So again, risk would be a breakdown here because we did not close inside the prior day's range, bringing us to the three equal lows, so on and so forth. Equal lows, daily downtrend remains in place. I suppose we already covered that, but there's another quick recap. XLRE, real estate sector. What's going on in this one? Really lightweight sector. Of course, this does have a lot to do with interest rates, and obviously with the CPI released today, it's very likely, based on what we saw, that we're going to get the 75 basis point hike. Obviously, that means that rates are increasing, which means real estate pricing should should come down. So are we going to break down underneath this level, 40.25? Maybe. If it does happen, it's such a lightweight sector, I would not read into it so much that this is going to quote unquote crash the market, okay? So keep it in the back of your mind. If we do see like the 75 basis points confirmed, this is probably going to move lower. Is it the end of the world? Absolutely not. If it just hangs out sideways in this box, fine, no red flags. Upward pressure is still upward pressure if it breaks out, and slight downward pressure if it breaks down, obviously, right? So really just more of a neutral outlook here inside of the real estate sector. Next up, XLB Materials, again, another really neutral outlook. Being such a lightweight sector, we're not going to read into it too much. Obviously, it's just kind of sideways down here at the lows. It did not gap underneath this low here, so it still kind of preserves, the neutral look on the daily time frame. If we were to breach this low around 71, that's where it would get a little bit more concerning and say, okay, you know what, maybe this is providing a little bit more downward pressure than we thought. Remember, though, it is still such a lightweight sector. It's not going to be the end of the world if it does, in fact, break down. Of course, these things only become the end of the world when everything else is red as well, and you're getting this major confluence in the marketplace, right? If the XLK is red, XLY is red, XLC, XLV, XLF, if all those heavyweight sectors are red and this is adding on top of it, that's where it becomes major confluence. There's no kind of rotation going on. That would keep the market more neutral. So that's the main takeaway from this chart here in the XLB. Next up, XLF, financials. Second heaviest weighted sector that we're watching. We've been ranting and raving about how this one needs to get in gear. What did it do today? It did not really impress us, right? If we go ahead and take out the trend line tool that we've had on many other charts, it did not hold up for a higher low. Instead, we've got the equal low here. 31 is going to be a major flush point. It's got to stay above 31. Otherwise, our daily downtrend does resume. Now, in the financial sector, we're going to get some big bank earnings tomorrow's session and Friday's sessions. So, keep an eye out for any major gap up or downs in those individual companies, JP Morgan, Citibank, Wells Fargo, all of those guys, Morgan Stanley, right? As those companies report earnings, it's obviously going to have a huge impact on your XLF. So be mindful of that as we move into the remainder of the week here. Breakdowns of 31, not good for the S&P 500, noting that this pattern is obviously no longer really in play with the breach of the support trend line, really just kind of a neutral close. It's much more of a doji. It is not inside the prior day's range. It kind of filled the gap and then rolled back over. Not impressed with financials. So this is the major risk, I would say, in the marketplace right now. The XLY, XLK looked okay. The XLF doesn't really look okay here, right? So 31 needs to hold, no ifs, ands, or buts about it. Otherwise, downtrend is probably going to continue here in our S&P 500. Next up, XLV, healthcare sector. What's going on here? Remember the analogy that we've been discussing in the pre-market live streams for like the past couple of weeks here. It's like the teammate on a sports team, right? So think football, soccer, lacrosse, baseball, whatever. One of those all-star players who's like carrying the team. Yeah, that was the XLV, carrying the team here. At some point, that player always usually gets tired and says, you know what, guys, like I love the sport. I want to keep playing with you guys. It's great, but I can't do it all by myself. That's exactly what the XLV has been saying this past little while. So as this pullback has unfolded, that's really the XLV saying, you know what, guys, I need to take a breather here. I need to take a pause. And if you guys can't pick up the slack, we're all going down with the ship, right? So XLV pulling back here, it's not the greatest look, but it's already done its part. That's why we really need that participation in the XLF for the market to find a firmer footing and break out to the upside. It's currently not really the look, right? As we just saw the weakness in the XLF and the weakness now in the XLV coming back down into the bottom end of the flag range. It filled the gap and rolled back over, closing red, the only red close on our sector lineup. Of course, there's a little bit of relative weakness here. If 127 breaks down, we're probably not looking for a bullish end of the week on the sort of loss of the low end of flag consolidation, right? Unless there's a magical breakout in the XLK and financial earnings, the bank earnings are fantastic, big gap ups across the board. Yeah, not a good look if the XLV loses 127, right? So watch that as a critical pivot into the remainder of the week. The ultimate line in the sand, as we know, is 125 from the monthly perspective, staying inside of this balance area right here. Look below and fail, needs to hold up at 125, worst case scenario, right? Worst case scenario. If it breaks down underneath, RIP, not a good look for the SPY, right? Last but not least, industrials, what's going on here? Again, weakness from the prior day's range, right? But not in terms of today's close, hence the 0.39% on the green upside. Still filled the gap, rolled over, closed the week kind of at the support trend line. Lighter weight sector, not overly sort of worried with the downward pressure that it's applying on the marketplace. I would start to become more concerned if we take out these lows, the equal lows, which are much closer to 84.50. So currently, more, I would say like neutrally bearish inside of the XLI. So if it stays hanging out sideways here, no big deal. New lows, that's where you get a little bit more concerned, okay? So overall, I would say the sectors are kind of a mixed bag here. Some things are showing signs of neutrality or improvement, whereas the XLF, the XLV obviously starting to weaken a little bit, which is concerning for our marketplace. Let's get on over to the sector ratio grid here. If you're not familiar with this chart, go ahead and get familiar. Top right-hand corner is going to show you how to set this up and what it all kind of means here. Nonetheless, in the top 4, we do see our risk on sectors. And as you can see, the XLK continues to look good. XLV pulling back a little bit. That's decent. XLY perking up a little bit here. Really solid day, right? So as we were discussing in the prior videos, risk on is starting to sort of turn on. It's firing a little bit here to the upside. We do need to see a little bit more follow through in the XLK to make a new higher high above this area here. We know that the XLV is fine. That's checked out for a while. So we'll put a little tilde here, a little bit more neutral. This is trying to get an upward sloping 50 SMA. So again, a little bit more neutral. The turn is trying, but again, where's the pain point? XLF. Quite obviously, right? Still in this downtrend right here, threatening the breakdown of the descending triangle. It's really all going to hinge on bank earnings, to be quite frank with you. If you get good numbers across the board, good guidance, I would imagine that this perks up at least to the 50 SMA and starts to assist in turning risk on back on. The bottom 4 sectors are, of course, the risk off sectors. What's going on down here? XLP looking good to the upside. So that is not a good sign for risk off turning off. XLE sideways, good look here, decent. XLU trying to go sideways, but still above an upward sloping 50 SMA. We'll put a tilde here. And again, sideways look in the real estate sector, which is really more of a tilde. So risk off is still not quite all the way off, right? Trying to get there with the improvements in energy and kind of a sideways look in utilities and real estate, but not all the way there clearly with the strength in the XLP. So overall, we're still teeter-tottering on that edge of an inflection point here where risk on could flip on if we get a little bit more improvement out of these sectors, namely the XLF, which of course, as we've mentioned numerous times now, bank earnings are going to play a big role in. All right, back on over to this chart for the TNX. Oops, TNX, not M. Wow, all over the place with the typing. TMX, RNX, all over the place. Anyways, TNX, here we go. This is the 10-year rate. And of course, we did get the CPI readings today, and inflation came in hotter than expected, right? We got the reading at 1.3. The expectation was 1.1, I believe, on the month over month. So not good. We have not hit peak inflation yet. We would need a downtick in inflation for us to classify something as peak, right? And it's currently not the case because we have an increased read. So what does that mean? It really means that because we got the strong jobs numbers last week, the market can withstand a 75 basis point hike and is very likely that that's what Jerome Powell and the Fed is going to give us in the next FOMC meeting, right? So be prepared for an increase in rates. That, of course, will be a drag for the tech sector, and it will, of course, bring down the real estate sector as well. The main one that we want to focus on, of course, is the XLK and its impact overall on the S&P 500. So be mindful of that, right? If they go ahead and throw us for a loop and they say, you know what, inflation, we've really got to kill it. We're going with 100 basis points. Watch out. That's probably the situation where the SPY breaks down. Nothing is feeling good. The XLK comes in aggressively. Even XLY will come in aggressively on a 100 basis point rate hike, right? So watch out for that. That surprise would be no good for the marketplace. As of right now, the market's shrugging off the 75 basis, right? It's saying, all right, we handled this in the past. We know it's going to sting a little bit, but we can move on from here. This one would throw a wrench in the entire mix, so be mindful of that if we start to see that coming in as a likely possibility for the next Fed meeting. So that's your TNX overall. Again, we want to see this stabilize. Again, what did it do on today's session? Lower, right? So that's a decent look for the XLK. We want to see it continue to do that as the expectation of 0.75 is kind of baked in to this overall sort of read. Again, the 100 basis points would probably send this higher. Let's go ahead and continue along with the behind the scenes look. The VIX is up next, of course. What's going on? The box of wickedness is still very much in play. You can currently see that's where we're at here, still above that 24 handle. But one thing that I do like to see, and we can only see this on the next step behind the scenes, so the VVIX, is that we did start to see some hedging, right? With the CPI big gap down, there was some call buying in the VIX and some put buying in the SPY. Of course, that wouldn't have played out too well if that was your day trade for the day, and we talked about that in the pre-market live stream, so hopefully you were there for it. But nonetheless, this did perk up just a little bit. So people are starting to properly hedge, which means that the downward spiral that we would see if a big sell were to come is decreasing in risk. Now, granted, this did move lower, and we're still sitting at these historic levels. We're not nearly close to that 103. The spiral could still be there, but it's not as aggressive as if we were trading down here around 83 in the VVIX. So the main takeaway from these two charts, both the VVIX and the VIX, is that there's still plenty of volatility in this marketplace. Even though we rallied off the gap down, don't really sort of write that off as being the most bullish implication, and there's still the possibility for a downward spiral if a major market sell comes, right? If we were to get that 100 basis point news, this would be an indication that we're probably spiraling, right? There's probably going to be a spiral. It's probably going to get nasty because no one is hedged properly, all right? That's your VVIX and the VIX. Let's move along. SPY, daily levels, 30-minute levels, hourly levels. We'll talk about those in just a moment. Overall, you can see a breach of the trend line. Not really a good look for the S&P 500. Rejecting also that upper wick, right, is right here up against this prior breakout point and where we wanted to see our line in the sand for this upcoming week at 381.50. Clear rejection right off of it. The close was outside the prior day's range. Not the most bullish implication in my estimation. Instead, what this looks more like is a gap fill and the start of a reversal. We did see that strength in the XLY, so we'll see if that wants to carry over into tomorrow's session. But as of right now, the daily chart doesn't really have me convinced that the buyers are in control. This is really starting to become a little bit more bearish here on the daily time frame, noting that we've lost the support trend line and we've now failed on the sort of back test of the breakout level, right? So going forward into the end of the week, 381.50 is still the critical pivot. Do we close the week out above or below? That's going to be a pretty important determination for the next step here in the marketplace. On the downside, we've been talking about these week lows. This is the level in the SPY. It's going to be 373.50. If that were to be broken, look out below. I think there might be a small bump in the road at 371, but there's really nothing stopping us until we come all the way back down here closer to 364. And obviously that would put into play the equal low from here to here off of a lower high. From here to here on the weekly time frame, downtrend would remain intact. So if the market were to rally higher, what's the next step, right? Obviously breaking back up and over that pivot we just discussed, 381.50, but the blue line stands in the way next. Let's go on up to, or excuse me, down to an hourly time frame. And just take a quick peek here. You can clearly see this is where the support was coming into play. That's where the rally stemmed from. That's why that level is so important to the downside, 373.50. There we go. And to the upside, once again, there's your resistance, there's your resistance, there's your chop, there's your resistance on today's session. We need to get back above, then we can go back into sort of neutral consolidation in this overall area right here. But the fact that we've pulled back off of it so far doesn't really give me, a warm and fuzzy feeling inside about recapturing that range and just, going back into neutral to bullish mode on the daily pattern, right? The daily pattern that we were watching out for was something very similar to what we were talking about in the XLY, ascending triangle. Yeah, kind of not really on the table now that we've breached the support trend line, right? So neutrally bearish here on the SPY daily time frame based on everything that we've just discussed here. Let's go ahead and take a look at the internals, market internals, see what these are telling us about the marketplace here. If you don't know about this screen, again, I've got a video for you in the top right-hand corner. Let's zoom in a little bit here. So what have we seen on today's, or excuse me, not today's, but this week's session, really? Everything's still flowing out of the market, right? Look at the net read here on Monday. Obviously, outflows breaching that negative 300 million mark. That's significant. The end of day sell on the Tuesday session brought us into the negative territory as well. And even on today's rally to close the gap, notice that we just barely scratched to positive and then closed out negative anyways on the end of day. So overall, outflows are still the primary look here in the market. We are still not getting broad-based market participation. On the advanced decliners, same idea. Negative here on the Monday session. Decent look on Tuesday, but again, look at the close. The give back was just too much, right? And then here, yeah, it's rallying up from the close, but all of the activity was negative on the day's session underneath the zero line. It's not like we got above the zero quickly, hovered above, and then closed strong above the zero line in the advanced decliner on today's gap fill scenario. In the ticks, again, perhaps most telling on the intraday, but nonetheless negative early on, neutral to negative on Tuesday session, and today, as the gap fill was unfolding, neutral for the majority of it, and then only really getting positive into the close here, which really didn't do a whole lot, right? We were really just neutralized here, and we're even drifting lower now in the post-market. So overall, we're still not seeing the broad-based market participation that we need for a firmer bottom here in the S&P 500 based on what the internals are telling us. Last thing for our S&P 500 is going to be the market profile. Again, if you don't know what this is, I've got a video for you in the top right-hand corner. Check it out. It's going to describe some of the terms that I'm about to use. Here we go. Main takeaway, we had a double distribution from the Tuesday session. On today's session, we move higher, close the gap, right? And where was the point of control? It was actually in the lower distribution. So that to me is a decently bullish sign, sort of conflicting with what we've just discussed on the internals. But the fact that the point of control was here inside the prior day's range, even though the close was slightly lower, is a bullish indication. There's no way around it. That's where the most volume transacted on today's session. So what would I do about this going forward? Really, there's no major major takeaways here on the market profile. Like, to be quite frank with you, there's no glaring deficiencies in the structure. We have decent excess at the lows, decent excess at the highs. I guess the main takeaway would just be exactly that. Point of control was technically higher inside the prior day's range. Carry that forward as only one singular data point that falls into the bull category here based on all the bearish data points that we had discussed earlier on in today's analysis. For downward virgin point of control, so that's going to be a VPOC right here, that level, just to give you a downside target, did we hit it? Actually very close, very, very close at the lows of today's session here. What's the number? 3760 for all intents and purposes. Let's zoom in on today's session. What was the low here? I'm kind of intrigued. I missed that one. Yeah, we're right there. So we did tag up to the virgin point of control. Let's see if we can actually rally up closer towards this point of control in the pre-market. We'll, of course, update you in the pre-market prep for tomorrow's session, but nonetheless, that would be the magnet that I would watch out for upside. If we get here, that turns me more to like neutral as opposed to neutrally bearish that we are currently sort of outlining for you in today's session. So that's the major takeaway from the market profile. Again, just the fact that the point of control was left inside the prior day's range. Let's go ahead and continue along to the QQQ. NASDAQ, oops, what's going on there? There we go. Sorry for the flip-flop back and forth. QQQ, here we go. NASDAQ 100, what's going on in this one? Certainly a little bit more relative strength, a firmer hold of the support trend line, a better close in the prior day's range. We know that, though. We just saw the XLK. It's going to mirror that, obviously, right? So not as concerned with the breakdown of the trend line here in the QQQ. Instead, we want to focus on this blue line right here. Again, on the hourly time frame, it becomes pretty clear why we need to get to that. Failed here the next day on the open, and we were not able to get to it on today's session. So if this does this, neutral, if it breaks out above, that's a trade to the bottom of the gap here at 296 and back up to the daily time frame. That would start to bring into play the breakout point here from the ascending triangle. So those are my levels to the upside. And again, with a close inside the prior day's range, a little bit more relative strength than the SPY, I would be focused on this trade into the remainder of the week. The break of the blue line there, 290.75 to get into 296. To the downside, if we cannot break out over the blue line and then we break down underneath the support trend line again, that's the red flag to say, you know what? It's probably not as neutral to slightly bullish as we think. Flip stances to more of a bearish outlook and probably look to retarget these equal lows around 276.75, right? If we were to move here, that sets up the weak area here for a breakdown into 270, right? Those are my levels and thoughts on the QQQ with the hold of the support trend line here. Moving along, IWM Russell 2000 and the small caps for our risk on, risk off sort of sentiment gauge, well above the support trend line, also above our 169, supporting there on the open. Firm close in the prior day's range, not quite above the prior day's open and close. We did get a doji there, but nonetheless, decent relative strength here, especially compared to the SPY. This would be a more neutral indication to slightly bullish if this one can get over its blue line here at 173.75. Going on down to the hourly time frame, just to illustrate that once again, rejection, rejection, rejection. It's where the support was. That's really where the blue line originated, right? But you can see all the history we have around it. If we can get back above it, that puts the bullish play back in play. And if we stay below, sets up the breakdown of this area here for the larger flush of this week's structure there under 167.25 that we were just exploring here on the daily time frame, the three equal lows that we've been discussing in nearly every major market index. So that has been the broad market. Let's get into the core list of companies here. Apple, then we've got 4 trade ideas for you, then we'll send you on your way. I know it's a late night video, so go ahead and drop that keyword in the chat or the comment section rather if you know what it is. And if not, you'll have to wait till the end of the video to find out what it is. So what do we see in Apple? Bull flag consolidation continues, closes the gap and closes inside the prior day's range, respected this prior set of highs. The chart continues to look absolutely phenomenal, remembering that this is the #1 heaviest weighted component of the SPY and the QQQ, strikes me as a bullish implication for the market, remembering that it is, again, just it's #1. It's as simple as that. So as long as we remain in this consolidation, it's building out a healthy bull flag here on the daily time frame. Eventually the breakout can come up and over 148.25 to bring us into 152.20. To the downside, a breach of that 143 brings into play the support trend line and this horizontal level here. It's the equivalent of our blue lines from in the past at 140. Okay, 140 would be the downside target on a breach of 143, trading for about 3 points. Definitely worth it on a quick day trade scalp or, couple hour long hold or something like that, however long it takes to get there ultimately if the chart wants to cooperate nicely. So overall, neutral, consolidation, breakout, breakdown. Very, very simple here inside of Apple. Next up, Netflix. been staying far away from this one recently. I just really do not like the choppy activity back and forth. There's really nothing going on here from a daily perspective that would look easy to trade, or, there's no glaringly obvious setup here. It's not respecting levels like Apple was so clearly. So Netflix, you kind of get the sense that there's some support here. Nice strong closes the gap, closes inside the prior day's range. I suppose there might be a little bit of a breakout up and over that high to squeeze out some of the shorts to bring us maybe back up towards this 183.50 SMA. That would be the upside trade that maybe you look for as a scalp on the intraday if the pattern's setting up properly. But as of right now, again, there's nothing really here on the daily time frame that's overly obvious to trade for. I would say, if anything, you're starting to build out a little bit of a balance range, and balance rules should be in play, right? At the bottom, you're looking for a mean reversion or a breakdown. There we go. Or from the top, you're looking for a breakout or a mean reversion trade as such. And currently, being in the midpoint of the range, I don't really think you have too much of an edge here. So not really feeling the love in Netflix. Anyways, moving along because there's nothing to do there. Tesla. What's going on in this one? So here's your daily range. There's the midpoint at 700. That's kind of where we've closed. So again, from the swing trader's perspective, this is not where your edge exists. Edge is here for breakout, mean reversion. Same is true, but opposite to the downside, mean reversion, breakdown. We just covered that inside of Netflix. The same applies here in Tesla. But for you day traders, I love the setup that's unfolding at 724.86. If we go down to the hourly time frame, look at what happened on today's session, right? All of these equal highs right at the rally point from last Friday's session. So if we were to clear this, I do imagine that we can stem some sort of rally again, and your target would probably be up into this like 750-ish area. So nice bull flag forming on the hourly. If we can capture that 724, wow, where's my brain at? 724.86 to the upside, boom, about let's just call it a 25-point rally into 750, right? That could be a possibility here inside of Tesla on that breakout. If we want to sort of drift lower, neutral inside of this area here. There's the drawing tool. Breakdowns under 700. I would kind of stay away from that one just because that's the midpoint of the range. Obviously, we rallied from underneath that on today's session. I think the better breakdown would be a glaring, obvious intraday setup, or on the daily time frame, flushing this area of support here around that 666.85. Okay, so that's Tesla in a nutshell. Next up is AMD. What's going on in AMD? Nice bar on today's session. The reason we call this one nice is for the same reasons we discussed in the XLY, really, is the close is above the opening print from the prior day's session. This is technically triggering a daily buy up and over the hammer high from the Tuesday bar, right? So as long as we're above this, it's game on for longs. If you're not long already, I would wait for this double bottom, high or low double bottom to trigger up and over the neckline, which would be a recapture of 80.44, okay, 80.44. And as we've discussed in the longer term, right, if this is going to turn into an inverted head and shoulders, maybe you get some sort of neckline like this that coincides with the neckline. The break is there into about 85. Okay, so that's the bullish trade here inside of AMD. Consolidation in here, so no follow through up and over this level. Neutral, and then your next breakdown is underneath 73 on the daily time frame. Next up is Meta. What's going on with Facebook and Zuckerberg? If we were to draw in something that looks like this, midpoint of the range, right? This is kind of the MO for today's session. We're in the midpoint, so again, edge exists here for this or this or this or this. Currently does not exist in the midpoint for any of you swing traders out there. However, I would start to look at this as a look below and fail on the daily time frame. Here's a 2-day balance. We look below on the gap down. We rally to close inside of that range. That's technically the failure. As you know, the target, if you've been watching the channel for any period of time, right, is going to be up here, right around the top end of that 2-day range. So what is the number? Let's go ahead and grab that for you. It's going to be around 167.10, right? If we look on the hourly time frame, very tight consolidation. The breakout could come early up and over 165 to get us there. Okay, to get us there. So that is the trade that we just discussed to the upside, neutral in this area, breakdowns back down underneath, probably target the opening print here 160 as your downside level before monitoring for continuation to the downside inside of Meta. Very simple. You have a balance range, play it quite simply, long and short, okay? That's what we've got inside of Meta. Again, based on the daily time frame, I would favor this look here for the scalp into that Monday high. Next up, NVIDIA. What's going on in NVIDIA? Is it going to be similar to AMD? Kinda. The inverted head and shoulders is certainly not all the way there yet. That would kind of, look something like this over time as a neckline. The breakout point is still much higher. It's from the 2-day balance range that we had on Thursday and Friday of last week, around 160. We're currently not very close to that, obviously. Instead, your breakout might be, for the end of the week at least, over 154 to continue into that zone 160, or if we're just sideways in here, much more of a neutral implication. If we go on down to the hourly time frame and talk about it, very similar to Facebook, right? There's kind of your range, if you will, Meta, now that it's called Meta, right? That always throws me off. I don't know about you. Let me know in the comments if that's been throwing you off. I always call it FB still. Nonetheless, NVIDIA, You can see how the breakdown would be underneath 148.50 for a retracement back to here, the first pullback low from this rally of last Tuesday, and also the low of today's gap down, right? So that would be your downside target for a scalp. Next up, Microsoft. What's going on in Softy? We'll go back to the daily time frame here. Some nastiness, honestly, and I do believe that this was based on the layoff news that they announced. Anyways, if this is going to turn into a double top here, firmly underneath the neckline, yeah, we're kind of there, right? So as long as this remains underneath 250, that's the bearish look inside of Microsoft, looking for continued rollover down into these equal lows, coming off of nothing more than just lower highs that preserves the daily downtrend, right? So this was looking really good. Again, I've talked about this in prior videos. I loved the flag here. I loved the hammer on Monday's session. Simply didn't pan out, right? The news ended up breaking the pattern, and now we're underneath for a double top. So play it as it lies. Don't really carry forward that bullish stance anymore. I would say if we get the bullish move across the entire market, let me be abundantly clear about that one more time. If we get the bullish move across the entire market, and this wants to recapture here, your first look is for 258. I would even go as far as saying you're probably better off looking for a short against that level, right? Just based on the relative weakness of this breakdown. If the market is kind of like, still lackluster, we're not getting broad-based participation, and this rallies a little bit, you could probably look for a short against 258. So any inverted hammers here, any double tops on the intraday, could be hourly, 30-minute, 15-minute, whatever. That could be a bearish setup on the back test of 258, given the breakdown from this flag, right? We failed to move higher. The sellers are clearly showing their hand as strong. Any move back into this could set up a short move, all right? Next up, Amazon, last but not least, mini beast. What's going on here? Zooming in on the daily time frame. Gap down, filled the gap, closed firmly inside the midpoint of the prior day's range. A little bit more bullish than bearish in the short term based on the strength of the close here, but nonetheless, just like inside of Microsoft, starting to look at this as a bit of a double top or just descending triangle, whatever. Lower highs, equal highs. We failed at 117, and we also failed the back test this morning this afternoon at 112. On down to the hourly time frame, you can see this clear as day. There's your failure. If we reject underneath this set of lows here, 110-ish, I would look for the rollover and continue downside move inside of Amazon. As we know, this is really the holy grail of numbers to be watching, right? 102.61 on the daily time frame has been taunting us as a flush point for quite some time, right? So boom, touch 1, 2, 3, 4, 5. If we were to get into it one more time, I mean, my goodness, that is a juicy descending triangle here on the weekly time frame. Looking for a major flush there under 102.61 if we were to reattempt it. Probably not into the end of this week, but early next week that could be on the table as a setup. All right, that's the core list of companies. 3 trade ideas. We're going to move through them quickly for you. RBLX is the first one. Roblox. What's going on here? Little consolidation doji on today's session, but why is it important? Because of the location here on the daily time frame. It's technically still above 36. This is a little bit of a breakdown underneath this consolidation here. If we have a look below and fail, as you know, the target is always the top end of the range. That could be roughly 41, okay? So a breakout up and over. Oops, let's go ahead and zoom back in here, and we'll grab the other tool. Breakout over 37.70, look for the top of the range, 41, as we were just discussing, and then monitor for continuation. This has been getting a little bit of love since earnings with the higher lows in place. So is this a break, retest, and then move higher? Could possibly be. So I like the little hammer candle that printed on today's session, especially at that 36 number. That's Roblox not interested if it breaks down, obviously. Next up is going to be TSM, Taiwan Semiconductor, right? Zooming in here. Obvious balance, right? The only problem with this one is that earnings are around the corner. When is that? 7/14. Okay, so that's actually tomorrow. That's before the open. All right, so here we go. I sort of must have missed that on my initial analysis here, but nonetheless, if we break out of the range, bullish. If we break down out of the range, obviously bearish, and you're trading for this gap underneath us, the upside target is also the gap. That's why I was attracted to this setup in the first place. You have 2 very clear targets on the up and downside. If we gap out of this range on tomorrow's open, then I would watch for a couple of things. A big gap up, but no participation across the broad market. Look for this to sell and come back in and test the gap here. If we gap down, I would be a little bit more neutral. I wouldn't really look for the gap fill on a gap down, okay? Just because the overall trend is lower as a whole. So that's what I've got for you in TSM. And again, apologies for the earnings, sort of missed that there. Disney is up next, DIS. Earnings a little bit further out. This is actually a failed breakdown, right? Failed breakdown inside of Disney. Very obvious level here at the 92 support. So 2 back-to-back lows, lows, lows. We flush underneath, close higher above the level. So a failure from the sellers to materialize from this descending triangle. The look should be for higher now, at least into the resistance trend line. I would watch out for 95.23 to act as a target, and your entry is probably up and over the hammer high, 93.19, right? So about a 2-point move there inside of Disney to the upside. Obviously not interested if it doesn't break in the first place, or we move back down underneath that 92 level. This is a scalp because we are going counter trend. That is Disney. Next up, we've got QCOM. There we go. Very similar to TSM, but this one does not have earnings around the corner. So here, well, I guess it does, but further out, it's literally not tomorrow. The reason I like this setup though is look at the bar that printed on today's session. Bullish engulfer from bottom to top end of the range, engulfing these two sell days. Zero follow through on the gap down. Instead, we close relatively strong above the prior 2-day highs, up at the top of the balance at this area of resistance. If 136.50 breaks, look left. Target is probably up here. Boom. I would start looking for 143.85 on a breakout here. It's just a little bit more than a range double. Typically, we're looking for range doubles. That would be 142.50. So you get the gist. Overall, working our way towards this area of resistance on a breakout of this range. Not really interested in flushes to the downside, given the relative strength that unfolded from today's bullish engulfing bar. All right, that's going to wrap up today's video. I know it was a long one. I know it was a late one. Drop that keyword in the comments section now. If you don't know what it is night owl. That's why you're seeing all the hooty hoos and the owl emojis in the comments section. I appreciate you all tuning in. Hope to see you on the pre-market live stream tomorrow morning. And with that being said, I wish you all a green trading week.